So here is your trade for today. I did live person, I think, about maybe a year and a half ago, and I was trading it right before it had fantastic earnings, right as it broke out of a symmetrical triangle, around, I think, $8.50. Yeah, I was trading it right here, and I bought there and I sold around $11.50. It was my best trade for 2011. Now I have a pretty much opposing position. It's gone up, kept going up, consolidated, and the trend is pretty much reversing. Like in a weekly chart, this honestly looks like a giant head and shoulders. Very demented head and shoulders, but in the shorter term, since October it's just been consolidating in a symmetrical triangle. And I've drawn these trend lines to denote significant levels. This first trend line right here, which I will make green, its first breakage was right here on January 23rd. So there's our first sell signal. And then we had this breakdown right here on January 30th. That is our second sell signal. Now coinciding with that was a breakdown below the 200-day moving average, which would also be considered a sell signal. Okay, so today it looks like it's trying to pull back. The moving average is at $11.98, and it's just at $12 right now. So I want to see it get below this a definitive level. So I would say, where is its low of the day right now? $11.96. I would short at $11.94. Where would our stop level be? Just around the 50-day moving average, and also the last large level of support. The last large level of support, which is just about $12.50, maybe a couple cents more than that, but $12.50. So that's going to give us about a 55-cent risk. So stop at $12.51. And that's just depending on where we get in, so maybe I'll just change it to 56 cents. And we expect this to go down all the way to this previous low at, where is it, $9.25. So if we enter at $11.94, and I mean short, 1.94 minus 925, let's see, I can bring up a calculator for this. Make life a little bit easier. Calculator. So that's just a simple 1194 minus 925. So 269 reward per share. So 269 reward per share. Alright, fantastic. So we have a very large risk-reward ratio on this. Like, just ballparking it right now, it's going to be close to 5. So for every 1 cent we're risking, we're expecting to gain 5 cents. That is excellent. So it's a great trade to make. Just make sure that you wait until it breaks below this moving average. One last thing, in the RSI, which normally gives us leading signals in terms of breakouts and breakdowns, this one has already given us a momentum sell signal, and while it's very small and currently throwing back, it is right there with the breakage of this trend line. See, large triangle formation in the RSI, very tiny breakdown, currently pulling back, but that gives us an opportunity to enter and hopefully make some money. Now, things to keep an eye out for: they do have earnings on February 13th, but in all honesty, from looking at what's going on, well, first, Insider Cow, we just had a major fund just drop 6% ownership of the stock. Funds are normally not wrong, and that's a lot of stock. But Yahoo LPSN. Take a look. PE ratio, 57.05. When I made this trade and bought earlier, it wasn't close to that. It was much lower. 57.05. Price to earnings to growth ratio is 1.56. Anything below 1 is considered undervalued, so this is not below 1. And what else? What else? So we have decreasing institutional sponsorship. We have a high PEG and a high PE ratio. And, well, that should be plenty enough to give you a fundamental case against the stock. So, here we go. Short sell 1194, target 925 at this previous low, or let's see, where is that actually? Yeah, about 925. You could be a little more conservative and enter and exit a little bit before that. Risk reward ratio is about 5, so it's an excellent trade to make. Just wait till it breaks below that moving average. Alright, happy trading.